Hello, everyone. Hopefully, you're doing well. This is Dr. Financial Literacy. I'm a political economist, not an attorney, not a lawyer, not a financial planner, just sharing my experience in terms of velocity banking. So let's go ahead and jump in to see my budget as it is of today. For me, velocity banking simply is taking my paycheck, dump it into the banks, and then putting it into a line of credit. That could be a PLOC, BLOC, in general, and it's a revolving line of credit. As of today, this is my credit situation. I have a total of $166,601 in terms of debt. I started off with maybe $353,000. My part of student loan was eliminated. I think that was 155,000. I've been doing this so far for about 606 days in terms of using velocity banking and reducing my debt. And this is where I'm at now, 166,000. I've increased it. As you know, I've been to the Japan. I've been to Aruba. Just came from Paris and France trying to spread the word. You can see here, these are my current balances. These are my current minimum payments. This is my debt to ratio. Debt to ratio is the balance itself divided by the minimum payment. And I'm using that as a way of organizing which one of my debts should I hit first. Let me see if I can format that to get a little bit more room out of it. Okay, two. Maybe I need to go to three. Okay, by getting the debt ratio, it helped me prioritize. The higher the debt ratio, the individual account that I should attack. So if you can see, Amex is at 33, although it has a smaller balance, the interest rate is at 29. Next will probably be the Bank of America. There's a personal one. And you can see Quicksilver is number one, but it's only the balance and the minimum payment. The average interest rate is 19.02%. Now, this is kind of like math because if I delete some of the ones that are zero, then the number will increase. Let's try that for instance. So for the 12,061, and I'm going to delete the Navy Green card. I just got that from Navy Federal. Also, this card and this card, because it's in the calculations. Now, before we do that, remember we're 1902 is the average. I'm gonna just go ahead and delete them briefly. It's still divided by 16, but it should be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So let me change that to 12 and see what happens to the ratios. Okay, 20.32. Next, I just calculated a minimum payment. So a minimum payment would be the balance itself multiplied by the interest rate, and that gave me a number. And I did that for each one. Then we have the credit limits on each one of the cards. We go ahead and put those other cards back. Okay, so my total credit limit right now is $304,000, 450, and available credit is 137. So just wanted to look at this video and look at my strategy. Navy Federal just approved me for another HELOC at 100,000. That's going to be replacing one of these HELOCs right here at, well, this is the one that's going to be replacing here, and it's going from 9.25 to 10.25. So this is again day one. Just wanted to come through and look at the numbers that I have. I'm dealing with a debt load of 166,601, available credit 304, and I'm just see how I can work this through using velocity banking. Okay, thank you very much, everyone. Have a great day. Bye-bye.